Hello, my name is Isaac and you are welcome to Grade 8 Tutor. Today we are going to look at another question on recording transactions in the books of account. Good. So we have the question on our screens. It says the following balances were extracted from the books of Pilolo Enterprise for the month of February 2022. Office furniture 150,000, cash on hand 70,000, bank balance 200,000. And trade receivables ascertain 1,200, free money 8,000, Suzy 26,000, power 14,000. The following transactions took place during the month of March 2022. Good, so the transactions are there. And the requirement is that we should write up the above transactions in the relevant books of what? Original entry, and determine the opening capital. Good. And post the relevant ledgers, and also prepare a trial balance. Good. So we are going to start with the I. For the I, we should know the account or books that falls under the what? Original entry, or the book. We should know the books of original entry. Good. And you know that the books of original entries are a sales journal, purchases journal, returns inwards journal, returns outwards journal, cash book, and general journal. You get it? So we are going to open all these accounts. You get it? So you can start from wherever you want to start from. You know that the returns and the sales journal is going to record every credit sale in this question. The purchases journal is going to record every purchase credit purchases in this question. You get it? And you know that the return inwards is going to record the return inwards journal is going to record every return inwards in this question, and also the returns outwards journal is going to record every return outwards in this question. Then the cash book is going to focus on the cash and bank transactions in this question. Okay, so you see that this one, the question didn't tell us to open a 2-column or single column or 3-column. We have to come to the question and check. What is it involving? Are there cash transactions? Are there check transactions? Is there any discounts? Okay, so if we come to check and we see that there is only one, there's only cash, we are going to open a single column. Or the transactions are involving only checks, we are going to open only bank column. But if we come to see that the transactions are involving bank and cash, we are going to open the 2 columns. If we see that it's also involving discounts, we are going to open the 3 columns. So you have to know what the transactions are about to open the column for the cash book. So from this question, we can see that we have discounts in the question, we have cash transactions, we have check or bank transactions. So we open the 3 columns for the cash book, which is the 3-column cash book. We get it. Good. And we are also going to open our general journal. So it's the general journal that we are going to use to determine the opening capital. And previously in the journal entries and ledger entries, I said that the one use of the journal is to show the opening entries and what the closing entries, and also correct error. We are going to use the journal to determine the opening capital. Good. So we are going to start with any of them. So I prefer to start with the cash book. Okay, you can start with sales journal. You can start any of them that you want to start with. Okay, someone to start with the general journal to determine his or her opening capital. Do you get it? Good. So with the cash book, we are going to focus or select the transactions that involve what? Bank or cash in it. Good. So we could see that the following balances were extracted, and we have cash on hand, which is 70,000, and we have bank balance, which is what? 200,000. Good. So we are going to see that these balances were ending the month of February. Okay, and we've started a new giving period. Okay, which is March. So we know that for the balances which is ending the month of February is the same balance that is going to start the month of March. You get it? So our ending balances for February will be brought down or brought forward to March. You get it? Good. So when we come here, March 1st. Good. So you are going to record our cash balances and bank balances. And here there's no CR to indicate credit or something. So it was open, that means that it is a debit balance. Okay. There was no overdraft. So the cash on hand has a balance of what? 70,000. So our balance BG 70,000. Good. Then our bank balance had a balance of 200,000. Good. So we are done with the bank balance. So we move on to check for any transaction that was involving cash or bank. You get it? Now we said the following transactions took place during the month of March 2022. Okay. We have March 1st. It says we paid cash 30,000 for rent. Okay, so if we have 30,000 cash, then we use that 30,000 to pay for rent. What is going to happen to our cash? It's going to decrease, right? So decrease in our cash, which is an asset, we are going to credit. So the date is March 1st. So we are going to record in the cash in the name of what? Rent. And the amount is 30,000. Good. Now we move on. It says credit sales. So this credit sales is not involving cash because we've sold to our customers on credit without receiving cash. But this cash book is focused on recording cash and bank transactions. Okay, so if we make sales on credit without receiving cash, there's no need for us to record here. You get it? For cash sales, we are going to record because when we made a sales, we received cash. The transaction was involving cash. But with this credit sale, there's no the transaction is not involving cash or bank. You get it? Good. So this transaction will be between sales and what? Trade receivables. It's not going to come here in the cash book. You get it? Because we are focused on selecting the transactions or recording the transactions that will what? Involve cash and bank. Good. Now we have March 3rd, which is cash sales. Good. So this one is involving cash. We sold goods and what? Received cash. So cash sales, what will happen to our cash is going to increase because we received cash from the sales we made. So we are going to debit in the name of what? Sales. And the amount is 150,000. Good. Credit purchases is not going to affect or it's not going to be recorded in the cash book, okay, because it's involving our trade payables and purchases. Do you get it? Good. Because we purchase from them without making payment. Good. So it's not going to come to the cash book. Now receive checks. Ascertain 40,000. Joe 10,000. Discount of 500. Freeman 96,000. Okay, you can see that this one is involving check, okay, or bank. That means that we are going to record it. Do you get it? And it says we received. That means it's increasing our bank amount or our check. Good. The date is March 4th. So we are going to write ascertain. Ascertain was 40,000. It was checked, so we record at the bank on 40,000. And Joe was 10,000. So Joe was 10,000. Then Freeman was 96,000. Good. But you see that Joe had a discount amount of 500. That discount amount in the bracket shows that the 500 has already been deducted from the 10,000. You could see that in a previous question pertaining to this one, you can see that the question said less 5% discount. Okay, you see we saw referring to the practice set 2 question 1. Okay, the question said less what? That discount, percentage of that discount. Good. But this one, it is in bracket showing that the 500 has already been deducted from what? The 10,000. Do you get it? Good. So now we will just record the what? Discount there. That was Joe, 500. Good. So that means that Joe was to pay what? 10,500. Okay, so when we deducted from it already, he paid 10,000, and the discount we allowed to Joe was what? 500. Good. So we move to the next one, March 6th. It says paid checks. Susie 24,000, and the discount was 2,000. Jane 20,000. Paul 40,000. Okay, that means paid checks. We had checks with paid. Okay, so what's going to happen to our checks? It's going to decrease. Decrease in checks, we are going to credit. Okay, so when we come here, the date is March 6th. When we come here, Susie, we have Jane, we have Paul. Good. So Susie, we paid check of 24,000 to Susie. To 24,000. Then for Jane, we paid 20,000 to Jane. Okay, and we also paid 40,000 to Paul. We paid 40,000 to Paul. Susie gave us a discount of 2,000. Okay, 2,000. So that means that we were supposed to pay 26,000 to Susie. Okay, we paid checks. We were supposed to pay 26,000 to Susie, but we received a discount of 2,000. The actual amount to pay was 24,000. This 2,000 has already been deducted from the 26,000. Okay, because we were supposed to pay 26,000, and now we are paying 24,000. Okay, so it has already been deducted for us in the question. Good. So we move to the next one. Returns invoice is not going to involve cash. It's not involving the cash and bank. So we move on. So this one will be between the returns invoice and what? The customers, okay, or the debtors. Returns outwards is not involving cash. It's going to be between the returns outwards accounts and the what? Creditors. Good. We move to cash sales. Cash sales. So for cash sales, we've made sales and received cash. Good. And the date is 15th. So what is going to happen to our cash? It's going to increase. So we are going to debit cash in the name of sales. And the amount here is 180,000. Good. Now we move to the next one. Paid insurance 50,000 by cash. We have cash, we use that cash to what? Pay insurance. So our cash is going to decrease. Decrease in cash. Cash is an asset. So decrease in cash, we are going to what? Credit. Do you get it? Good. So you have to know the decrease and increase. Okay, so you can refer to the introduction to accounting to understand those things well. Good. So with this, cash, it says paid insurance by cash. So that means that our cash is what? Decreasing. So we are crediting. We are crediting the cash. And the amount involved here is what? 50,000. Good. And the date was 16. Good. We move to the next one. It says cash sales 120,000. It's the same thing. So cash sales is going to increase our cash. So the date is 16. The amount involved is 120,000. Good. Now we have cash purchases, okay? So if we make purchases, cash sales here means we've made sales and received cash, okay? So that means that cash purchases will also mean that we've purchased goods with what? Cash. Do you get it? So what is going to happen to our cash? It's going to decrease. Do you get it? Cash sales will increase our cash. But cash purchases what? Decrease our cash. You get it? Because from the cash we have, we use that cash to what? Make purchases of goods. You get it? So it's going to decrease our cash. So when we come here, we will record in the cash column in the name of purchases. Okay? And the amount here is 120,000. The date is 20th. Good. Now we move to the next one, 25th. It says paid cash into bank. Okay, so this is a contra entry between the cash and bank. So what's happening to these two items? Because they are the ones we are interested in. Paid cash into bank. We have cash, we've paid that cash into bank. So our bank amount was going to increase, then our cash is what? Going to decrease. You get it? So that 150,000 cash we have on us is no more with us, but it's going to increase our bank amount. Good. So we are going to credit the cash, then we'll debit the bank. The date is 25th. So here bank. Cash. You get it? Because we have to what? Debit the bank, because it's the bank that is increasing. We debit the bank in the name of cash. The which one is decreasing is the cash. So we credit the cash in the name of bank. So the amount involved is 150,000. Good. So we move to the next one, which says purchase office furniture by check. Purchase office furniture by check. So if we have checks and we've used it to purchase office furniture, what's going to happen to our check? It's going to increase by that amount, right? 250,000. So we are going to credit what? Check. Decrease in assets, credit. Good. So the date is 28. Office furniture. The amount involved is 250,000. Good. So we could see that there is no other cash or bank transactions again, because that's all what we've recorded. Okay, you can see that there is no bank or cash transactions again. So we've selected the transactions that were involving cash and bank, and now we've recorded them in the cash book. So now what we are going to do is that we are going to balance the accounts. Okay, so we are going to balance all these accounts and see which side is what? The greater or the bigger side. Then after that, we'll find the difference between the bigger side and the smaller side to get our what? Balanced CD. Good. So let's check for the totals. Okay, so we'll see that the debit side is what? Greater than the credit side. That means that is when we added all this, it was greater than this side. Okay, so the debit amount at the cash column was greater than the credit amount at the cash column. Okay, and the debit amount at the bank column was also greater than the what? Credit amount at the bank column. So that means that we are going to repeat both totals at both we are going to repeat the totals at both sides. You get it? Because the greater side or the bigger side is what we are going to repeat at both sides. Okay, so that means that the shortfall will be here. So that this is where we are going to see our balance CD, the difference. So the totals let me bring it down so that our balances will be shown clearly. Good. So for the discount, we know that we are still going to write that 500. We are still going to write that 2,000. Okay. So adding all these, we are going to get 520,000. 520,000. Okay. You will see that when you add these, you are not going to get that 520,000. Okay. Because this side is bigger than this side. Then so this one, when we add this, then we subtract it from 520,000. What we will get is the what? Balance CD for cash. Good. So here 31st balance CD. So we are repeating the totals at both sides, 520,000. Then the bank amount here to what? 496,000. 496,000. Good. So now our balance CD is going to be this minus the total of this. Okay. So we are going to have 170,000 for the cash. 170,000 for the cash. Then you are going to get 162,000 for the what? Bank. Good. So this amount is going to be brought forward here as April 1st. Okay, because that's what is going to start the month of April. So balance BD. We have 170,000. Then we have 162,000. So that's all for the cash book. So we've been able to complete one book of original entry because cash book is fast. So we've been able to complete. Now instead of the general journal, sales journal, purchases journal, returns inwards journal, returns outwards journal. Good. So we are going to also open that one too. Okay, so we are going to start with the other journals or the books of original entry. So we are done with the cash book, we are done with the general journal. So let's continue with the sales journal and purchases. We are left with 4. We are done with 2. Good. So with this, we know that the sales journal is going to record credit sales. So whatever credit sales you see in this question, you record them here. Okay. Whatever credit purchases you see in this question, you record them here. Good. So we are starting. So we could see that March 2nd, there was credit sales. Okay, so the credit sales were involving Asante, Joe, and Freeman. Okay, and the date was March 2nd. It was involving Asante, Joe, and Freeman. Okay. So ascertain was 50,000. Joe was 55,000. Freeman was 117,000. Good. So we check if there's any credit sales, and there was none. Okay, so you can see that in the question, these were the only credit sales. So that is what you are going to record. Good. So after doing this, you close your account. So now we want to know the total credit sales. Okay, so add these three, and what are we getting? We are getting 222,000. Okay, 222,000. Okay, so this amount is going to be transferred to the sales account. Okay, because the question says we should open the relevant ledgers, and we are going to open the general ledger too, which involves the sales account. So this amount is going to be transferred to the sales account. So transfer to what? Sales account. Good. So when we come here, we will look for the credit purchases in the question. And we will see that March 4th, there was credit purchases, and that was the only credit purchases. So when we come here, March 4th, okay, it was involving Susie, Jane, and Paul. Susie, Jane, and Paul. Good. And the amount was 30,000 for Susie. And 35,000 for Jane. And Paul was 59,000. Good. So the totals is going to be transferred to what? The purchases account. Good. We are having a total of 124,000. Good. So when you add this, you are going to get 124,000 as the purchases, credit purchases. Okay. Good. So we are moving on to the sales returns or returns in what journal. Good. So okay. So return in what journal. So this one is going to record the returns in what we made. And the amount. Good. So now, let's check for our returns inwards. So you can see that March 8th, there was returns inwards, okay? And it involved ascertain Joe and Freeman. Good. So March 8th. Ascertain Joe and what? Freeman. Joe. Ascertain here was 10,000. Then Joe here was 1,000. Then Freeman here was 3,000. Okay, so together we are getting 14,000. So this one is going to be transferred to what? The return inwards account. Good. So we move on to the return outwards. The return outwards journal. So we have our dates, our details, then we have our amount. Good. So we check out for returns outwards and we see that March 10th there was returns outwards, okay? March 10th. And it involved Jane and Paul. Okay, so Jane and Paul. Good. And the amount was 3,000 for Jane and 1,000 for Paul. So together we are getting 4,000. So this one is going to be transferred to what? The returns outwards. Outwards account. So that's all for the books of original entry. Okay. So we know that there are 6. There are the cash journal, sales journal, purchases journal, returns outwards, and returns inwards journal. And we've opened all of them. Okay. So we are moving on to the second requirement the question is saying that we should do, which is the what? Posting to the relevant ledgers. Okay, good. Okay, so we are going to continue with the general journal. Good. So with the general journal, we are going to use that one to determine our opening capital. Okay. Good. So first of all, we have our dates, the details, the debit credit. So these are the general looks like. Good. So we'll start with our date. March. Good. So we are going to list our assets, liabilities, and what? Capital. So they've given us our assets in the question, and they've given us our liabilities. So how do we get our capital? And we know that assets is equal to capital plus liability. So if we have our assets, we have our liabilities. How do we get our capital? We are going to what? Less the liabilities from the assets to get what? Capital. So the capital is equal to the assets minus the liabilities. They get it. Good. So let's move on. They've given us office furniture. And we know that assets have debit balance. Okay, so we will call it here. 150,000. They've also given us cash on hand. Cash on hand, which is 70,000. They've also given us our bank balance. Our bank balance, which is what? 200,000. Any other assets? They've given us our trade receivables. Our trade receivables. Okay? And we are going to list our trade receivables. We have ascertain, we have Freeman. So these are the two trade receivables that had balances as at March 1st. Good. Okay, ascertain and Freeman. So ascertain had a balance of 1,200 to settle. 1,200. Good. And Freeman had a balance of 8,000. Good. So we move to our trade payables, which is the liability. That's the only liability we have in the question. Okay, so when we come here, our trade payables, Susie and Paul, they are the only creditors that have balance. Susie and Paul. Okay, so Susie had a balance of 26,000. So as at March, they're owing Susie 26,000 and Paul 14,000. Good. Our capital is what we want to find. Okay? Our capital is what we want to find. Good. So, with this question, we will see that when we want to find the capital, we have to less this from the assets, the total assets. So, the liability that is given to us, which is this one, we have to less them from this total, the total of these. You get it? So, the total of the assets will be 429,200. So when we add this and this together, we are going to get 429,200. Good. And when we add this together, we are going to get 40,000. Okay. So 429,200 minus the 40,000. What are we getting? That is going to be what? Our capital. Good. So we get 289,200. So 429,200. You see, so the difference is what is going to be our capital. So when you add these, we are getting the 429,000. Because you know that asset is equal to capital plus liability. So that means that our assets, our total assets, has to be equal to the total capital and liabilities. You get it? So that's all for the journal. So we are going to move on to the sales journal, purchases journal, the returns outwards and returns inwards journal. Okay. Okay, so we are going to continue with the what? Ledgers. Okay, so with the ledgers, we know we have the subsidiary ledgers, which contains the debtors and what? Creditors, or the sales ledger and purchases ledger. Okay, so the sales ledger contains the personal account of our customers. Okay, and the purchases ledger contains the personal account of our creditors or suppliers. Good. So we are going to record the sales ledger first. So with the sales ledger, we should know that they record the trade receivables, and the trade receivables here are Ascertain, Freeman, and Joe. Okay, good. So these are the people that we made sales to on credit. Good. So those are our what? Customers. So those people are what we are going to record. So we are going to open Ascertain's account. Good. And also Joe account. Good. And also open Freeman. Good. We have our Ghana cedis here. So let's start. So we could see that at the start of the month, there were balances for ascertain and free man. Okay, so when we come to ascertain, balance BD. Okay, balance BD of how much? 1,200. And free man also have a balance of 8,000. So if you are confused why I didn't report at the credit side and debit side, it's because debtors or our customers will have a debit balance. If you want more understanding on these ones, refer to the introduction to accounting. Good. So we move on to any transactions that were involving these customers. Okay, so we have the balances for them. Joe had no balance. Good. So we move on to March 2nd. Okay, credit sales. Good. So when we come here is first what? March. So March 2nd. Sales. Okay, or credit sales. Good. Ascertain was 50,000. And Joe was 55,000. Good. So March 2nd. Okay, then we have Freeman. Okay, credit sales 117,000. Good. Then we check for any other transaction that was involving these customers. So we move on to received checks. Okay, checks received. Good. So checks received will be here. So we have ascertained to be what? 40,000. So checks received. Ascertained is what? 40,000. Then Joe was 10,000. Checks received. The date is 4th, March 4th. Checks received. Joe was 10,000. But we could see that Joe had a discount of 500. So our discount allowed will be here. They get it. Good. So 4th March, discount allowed. Is 500. Good. So if you are not understanding why I'm recording at the other side of the account, anything that will increase the debtor's balance is going to be debited, and anything that will decrease the debtor's balance is going to be debited. So if we make sales on credit to Joe is owing us. So if the amount they owe us is increasing, we debit. Okay. So if they pay us through checks, we credit. Do you get it? Good. So that means they reduce the amount they owe us when they are reducing the credit. If they are supposed to pay us 10,000 and now they are paying they are supposed to pay us, let's say, 10 cedis, and we gave them a discount of 2 cedis. Now they are paying 8 cedis. The amount they owe us has decreased, right? So if you want to understand it more, you can refer to my video on control accounts to get the concept very well. Okay, good. So we are going to Freeman. So the same 4th March. Check receipt. $96,000. Good. Then we check for any other transaction involving the customers. We have return invoice. Good. So we know that returns invoice will be here. And the amount for Joe was 1,000. The date was March 8th. So when we come to this side, March 8th, return inward. We have ascertained to be what? 10,000. Good. Then we have 3 months to what? 3,000. To be 3,000. Good. So we'll continue and check if there is any other transaction involving the accounts. Good. So it seems there is no transaction again involving the account. So we move on to what? Balance the account. Okay. So we move on to balance the account. So we will see that this side is what? Greater than this side. 51,200 and what? 50,000. Good. So we are going to get our balance CD here. Good. So 51,200 here, 51,200 here. And you know that the difference is what? 1,200. Good. And we'll bring them forward. April 1st. Balance B, which is going to be the same 1,200. Good. Then we'll come here to do the same thing. Okay. When we add the 8,000 to this, we are going to get 100 and what? 205. Right? We are going to get 125,000. Okay. So when we add this to this, we are going to get 125,000. Good. Because you know this is greater than this side, so we record at both sides. Then we find our difference. Okay, our balance CD. Good. And we know that the difference is going to be what? 26,000. Good. There's no space here, so after this one, we have to bring it forward as it got down. Good. So we move to balance Joe. Okay, so for Joe, we know that this side is greater than this side. Okay, so our balance CD will be here. So 55,000, 55,000. Good. Then we'll find our difference, which is what? 43,500. Good. Then we'll bring it forward. Equal first. Balance BG, which is the same 43,500. Good. So that will be all for the sales ledger. So we'll be moving on to the what? Purchases ledger. Good. Okay, so we are going to continue with the purchases ledger. Good. So let's get started. Now, we know that for the account here, the balances of the account was only Susie and Paul were having balances, okay? Only Susie and Paul that we owed them at the start of the month. And Susie's balance was 26,000. Good. And Paul, which is 14,000. Good. Then we move on to any other transaction that was involving these accounts. We have credit purchases here, okay? So the date is March 4th. So credit purchases. The amount involved for power was 59,000. Okay. Good. There was no balance for Jane, that's why we don't see any balance there. Good. And credit purchase for Susie. Credit purchase for Susie was 30,000. 30,000. Good. Then we move on to Jane. Jane was 35,000. Good. So we'll check if there's any transaction involving these accounts again. Then we have paid checks. Okay, paid checks. And the date was 6th, which was involving Susie, Jane, and Paul. Okay, so paid checks. Checks paid. It was involving Susie, Jane, and Paul. Okay, and the date was 6th, March 6th. So the amount we paid to Susie was 24,000. Okay, so you will see that there was a discount of 2,000 we received from Susie. So that means that we are going to record the discount here. Okay, good. So discount received. $2,000. Good. So we move on. So you should understand why I'm recording it there. So if you don't get it, then the credit side for the purchases ledger, okay, or the creditor's account, the credit side shows an increase in the amount we owe them, and the debit side shows a decrease in the amount you owe them. So if you want further explanation, you can refer to my video on control account to get a better understanding of it. Good. So let's move to the other transactions involving this paycheck 24,000, a discount of 2,000, J 20,000, J 20,000, then PAL 40,000. Good. So we move on. Return outwards, which was involving only J and PAL. Okay, so return outwards, which we know that it will be here. So J and PAL. Return outwards. Okay. March 10th, J was 3,000. And PAL was 1,000. Good. So we move on to see if there was any other transaction involving these accounts. Okay. So we see that there were no other transactions involving these accounts. Good. So now we move on to balance the accounts. Now we have to balance the account. Okay. So this side and this side, we could see that this side is greater than this side. So this total will show at both sides. Okay. So here is 56,000. So our balance CD is going to show here. Okay. So our balance CD is going to be what? 30,000. That's the difference. We'll bring it forward. April 1st. Balance BD, which is what? 30,000. Good. Now we go to this one and balance it. So we can see that this side is what? Greater than this side. Okay. So we are going to record it at both sides. 35,000. 35,000. Then we find a difference. Okay. And the difference is 12,000. Balance CD. April 1st. Balance BD 12,000. Okay, so we are going to continue with the general journal. So with the general journal, it records all the other accounts apart from the transactions relating to the personal account. Okay. So with this one, we can start with any of the account. Okay. So I will start with the sales account. So I will start with the sales account, purchases, return to what, return output. Okay. To finish, to deal with my transfers to the sales and purchases account. So I'll open my sales account. Here, I have my Ghana cedis. Ghana cedis. Good. So now I'll look for the sales transaction. Okay. So when I come to March 3rd, I could see that there was some sales transaction there, cash sales. So when our sales is increasing because now we are back to the sales account. So what's happening to the sales here? We've made sales. As our sales increase, we are going to credit because it's an income or revenue. Increase in revenue or income, we are going to credit. Okay. So March 3rd, cash. was what? 150,000. Good. Then we move to, you could see that there was another cash sales in March 16th. Okay, there was another cash sales in March 15th. Good. So the same cash sales. So March 15th, cash 180,000. Yes. Good. Was the same cash sales increase. Good. Now we move on to March 16th. March 16th, there was another casting, okay? So the same casting, March 16th, which was 120,000. We will check for any other sales transaction. Okay, so there are no sales transactions again. So we are now going to transfer our what? Credit sales. Because the sales account involves the cash sales and what? Credit sales. Okay, good. So at the end of March, transfer, okay, to transfer from sales journal. And the amount we had was 222,000. Good. 222,000. So that's going to be our total for sales. No, that's going to be our transfer from sales journal. So the total for the sales is going to be 672,000. Okay, so we'll add all these, and that's going to be our total. The biggest side will be recorded at both sides. So it's 672,000. Now we want to find our balance BD or balance CD. So when we come here, March 31st, balance CD is what? 222,000. Good. So April 1st, our balance BD is 222,000. You get it? So normally you will see in the trial balance that the sales amount is this. So it's so when they tell you in your trial balance sales, maybe this in the trial balance, that means that you can see that it's the addition of credit sales or cash sales. Sometimes it will not be involving cash sales. Sometimes it will be only credit sales. You get it? So what I want you to understand is that the sales comprise of the credit sales and all the cash sales. Good. Now we move on to purchases. So purchases account. So with the purchase account, we are going to check for all the items that were involving purchases. Okay, so we have our Ghana cedis here. Yeah. So we could see that we only made cash purchases on March 20th, okay, which was involving 120,000. So as purchases increasing, we debit, okay, to 120,000. Good. So we check for any other. There was no other purchase. So we are now going to bring our transfers, okay, to the transfers from purchase journal, which was 124,000. Good. So that's going to be our total purchases. So when we add it together, we are going to get 244,000. 244,000. Now we have March 31st balance 244,000. When we come in April 1st, balance 244,000. Do you get it? Good. So that's the account for purchases. Good. So now we move to the returns outward account. Okay. So returns outward. Good. So this one is also going to record our return outwards. Good. So our returns outwards here is the transaction that was involving the returns outward. And normally this transaction has already been treated in the returns outward schema. So you just transfer from the returns outward schema to the returns outward account. Yes. Good. And the amount here was 4,000. So that's going to be our total. Our balance sheet is going to be the same 4,000. So you could see that even if you go back to the question to check out for returns output, you see that it's the same thing we did in the returns output schema. It's what we are going to see here. We are still going to get the same 4,000. Okay, it's like the sales journal, the sales account here. You could have written each credit sale here, showing each credit sale. We will still come and get that 220,000. So let's say these credit sales that were in the question, that was 50,000, 55, and 117,000. If we decided to record each of them as credit sales, you see that when we add up, we still get this, or when we add all of them, we still get this 672. Okay, so it's better we just transfer the what sales account. The same applies to purchases. Good. So we move on to the return invoice account. Good. So with the return invoice account, we are going to report the transaction that was involving what return invoice. And we know that these transactions have been dealt with in the what returns invoice schema. So we just transfer it to the return invoice account. Yes. So 31st March transfer to return invoice. Okay, instead of you writing these long sentences, you can just write transfer. Okay, good. So the amount here was 14,000. Balance CD, which is the same 14,000. Okay. April 1st. Balance BD 14,000. Do you get it? Good. Now we move on to other accounts involved. Good. Because we are recording every other account that was not involving the subsidiary level. Okay. Good. So now we have to start with the discount allowed and discount received. Okay, so discount allowed. Discount allowed account. Good. So when did we have a discount allowed in the question? You can see that it was March 4th. Okay, March 4th. We allowed discount to 500,000. So that's what we are going to show in the account. So March 4th. Good. There was no discount allowed again. That was the only discount. So we just close the account. Good. Then we'll bring the CD as what? Balance BD. 500. Okay, then we'll move on to discount received. Discount received account. Good. So we know that the expense, this one is an expense, discount allowed is an expense. Okay, so it's going to have a debit entry. Okay, good. So when we also know that discount received is an income, and when it increases, we are going to credit. Every discount received, we will see in the question has to be credited. Good. So we have Ghana CBC here. Then what discount received was in the question. We see that March 6th, we what? Received a discount of 2,000 from Suzy. So that's what we are going to record. Good. So that's going to be the total for the discount received. There was no discount received again. They yet it. Good. So we are just recording every transaction. Good. So now we move on to rent. Let's move to rent. It's not recorded rent. Okay, so I'll clean the box so that we record the other accounts involved. Okay. Okay, so we move on or we continue recording our accounts. Good. So we have rent. You see March 1st, there was a transaction involving rent. So we have to open rent account. Good. And we know that as expenses are increasing, we have to debit. Okay. Good. Then we paid for rent. Okay. The amount we paid for rent has increased by what? 30,000 because that was the amount involved. Good. In the name of cash. Good. Let's see if there was any rent here. There was no rent in the question again. Okay, so we are going to close off this account. Good. Then we have this one here, April 1st. Balance be the same 30,000. Yes. Then we move on to so we move on to insurance. Yes, there was a transaction involving insurance, which was in March 16th. Good. So we are going to open our insurance account to insurance. Good. So with the insurance, you could see that we made payment for what? Insurance. Good. We are insurance is an expense we are going to debit. Good. So it was March 16th. Good. And it was involving cash. So we recorded in the insurance account in the name of cash, and the amount was 50,000. Okay, 50,000. So we check for any other insurance transaction, and we see that that's the only insurance transaction in the question. Okay, so we are going to close off this account to March 31st balance CD 50,000. Good. So 50,000, 50,000. So it will come here April 1st. Balance BD 50,000. Good. So open the other accounts left. We have office furniture. Good. Office furniture. We open our office furniture account. Office furniture. So what transaction here did we have pertaining to office furniture? We should know that this office furniture here had a balance, okay? It had an opening balance. So we are going to use that opening balance to start the account. So March 1st, balance building. And the opening balance was 150,000, 150,000. Good. And we have, let's check for any other. It says purchase office furniture by check. So that means that our furniture MP and the date was March 28th. Okay. So by check bank. It's increased. So there was an additional amount of 250,000 added to the 150,000 office furniture we already have. 250,000. So we check for any other office furniture transaction here. So you could see that that's all for the office furniture. So we are going to close the account. So the total is 400. Good. So March 31st. Balance CD 400,000. And April 1st. balance BD 400,000. Okay. So the CD is always the same as the B. Just that when the CD is at the credit side, it is brought down at the left side. When the CD is at the left side, it is brought down at the what? Right side, which is the credit side. So we move to any other um, account that we are supposed to open. Okay. So we've done sales account, we've done purchases, we've opened rent inwards, return inwards, return outwards, discount allowed, discount received. We've opened insurance and we've opened office furniture. Okay. So we are left with capital. Good. Because for the cash and bank, we've already done it in the cash to find the new balances. Okay. Good. And with the trade receivables, we've done it in the sales ledger. Okay. And the trade payables, we've done it in the purchases ledger. Good. So now we are going to open our capital account because we use the general account to find our capital account. And we know that we are going to get the same amount in the capital account. But we still have to open the capital account. Good. So the capital account here. Okay. So match balance BD. So the capital amount that we had was 389,200. Okay, 389,000. That was the difference that we had in the general journal. Good. So when we come here, we will balance it off. That's the only amount we have for capital. So balance CD 389,200. Good. 389,200. Then it will come here, April 1st. Balance BD 389,200. Do you get it? Good. So these balance BDs, okay, or these balances brought forwards are what we are going to show in the trial balance, because we said in the introduction to accounting that the trial balance is used to what show the credit balances and debit balances, okay, to check whether they follow the double entry principle. Okay, so when we use these balances to draw up our trial balance and the debit side is not equal to the credit side, that means there's something wrong with what we've done. You get it? Good. So now we are going to open or draw up our trial balance, because that's the last requirement for what this question. Good. It says we should open the books of original entry, which we've done that. We should post the relevant ledgers, which we've done that. This is the general journal, we've done that. General ledger. And he said we should prepare a trial balance. So the third requirement is that we should prepare a trial balance. Okay, so we are going to start recording or drawing up our trial balance. So we are going to list all the debit balances here, then the credit balances here. Okay, so we are going to start with capital. You see, we had a capital of 389,200, and it was the balance BD was found at the credit side, right? And we know that the capital has a credit balance, 389,200. Good. Then we move on to sales and purchases. Okay. The sales, okay, and purchases. Good. So with the sales and purchases, we have 672,000. 672,000. Okay. The addition of the cash and credit sales, we had 673,000. Okay. And the balance BD was found on the credit side. Then we have purchases 244,000. Okay. 244,000. 44,000. Okay, the cash purchases and the credit purchases. We have 244,000, and the balance was found at the debit side. We have return invoice. Okay, so return invoice. Return outward. Good. So you should know that, okay, so the balance will let us know where you are supposed to report. But you should know that the return invoice will always be here because it has a debit balance. Then the returns outward will be here. But we will see that from the returns invoice and returns outward account where the balance BD was. Okay, good. So with the return invoice, we had 14,000. 14,000 for the return invoice. Then we had 4,000 for the return out. Okay, so we move on to the discount allowed and discount received. Discount allowed and discount received. Good. So with the discount allowed, we came to end up that, or after drawing the discount allowed account, we saw that the balance BD was on the debit side. Okay, so we are recording the debit balances here, and the amount was 500. And for the discount received, it was 2,000. It had a credit balance of what? 2,000. Good. Then we move on to the trade receivables and payables. Trade receivables and the trade payables. Good. So for the trade receivables, what we are going to do here, you see in the sales ledger, we drew up the individual accounts of the customers. Okay. So if you want to know the total amount of balances for the customers, we are going to add up all the balance BDs of the individual customers. Okay, good. So let's go. You see, for instance, when we were drawing up the sales ledger, we had ascertained account balance to be 1,200. Then we had Joe's balance to be 43,500. Good. Then we had Freeman's balance to be 26,000. You add all these balances together and you will see that all the balances were at the debit side. So we are going to record it at the debit side for trade balance. But you have to add all these balances together. That's when we are going to get the total trade receivables balance here. And the total was 70,700. Same for trade payables. Okay, you could see that the trade payables we had Susie's balance to be 30,000. Okay, and we had Jane's balance to be 12,000. Then we had Paul's balance to be what? 32,000. So all these individual accounts had a credit balance. So we know that we are going to call that the credit side. But I want to know the total trade payables amount. Okay, we are going to add all the balances together. That's when we are going to get our amount of 74,000. Good. So we move on to the other accounts involved. We opened rent. So the rent, our balance was at the debit side. We are going to record at the debit side because that was where our balance BE was. And expenses have a debit balance. Rent was 30,000. Good. Then we move on to insurance. Insurance here. Insurance is an expense to have a debit balance. But even when we want to compare, we see that the account we opening for insurance, the balance BD was at the what? Debit side, or the opening balance was at what? At the debit side. So it showed a debit balance of what? 50,000. Okay, so we move on to office furniture. So we are opening or showing the balances of all the accounts we opened. Office furniture. Office furniture gave us a debit balance. Okay, we know assets have a debit balance. Okay, and the total or the balance BT for the office furniture was 400,000. Okay, so we are just transferring the balances from the account we drew in the sales ledger, purchases ledger, which the sales ledger totals are the trade receivable, and the purchases ledger totals or balances are what? Trade payable. And the general ledger, we opened the account for each of the items. And we are just transferring the balances to what? The trial balance. You get it. So the one which had the debit balance will be recorded under the debit side. The one which had the credit balance will be recorded under the credit side. So office furniture is recorded. Then we have bank and cash. Okay. Bank and cash. Good. So you could see that after drawing up our cash book, we had a balance CD, which was brought forward as balance BD. Yeah. So we had a balance BD at the debit side. You see that we had the difference at the right side, which is the credit side. Then you bring it forward at balance BD, and it has appeared at the debit side. Yeah. So the balance BD for cash and bank was a debit balance. We are going to record it under the debit side. And the bank showed a debit balance of 162,000. Then the cash showed a debit balance of 170,000. So these were the accounts involved in this question. So you could see that every account that was every account or item here was in the question. We've dealt with all the accounts. So normally you will see that these are the items that we normally prepare the profit and losses and statement of financial position. So now we are going to total. We are going to total trial balance. If you don't get this side equal to this side, that means we made a mistake somewhere. Okay? That means we didn't follow the double entry principle somewhere. Or we didn't record the right item at the right account. Okay. Good. So when we add this one up, we are going to get 1,141,200. 1,141,200. When we add this one, so we are going to get 1,141,200. Good. So that's all for the trial balance, and that's all for this question. It's a very lengthy question, but not very difficult. Okay. There's a difference between the difficult and lengthy. It's just plain but not difficult. Okay, so you have to understand the books of entry that the question is asking you to. Okay. Then you understand the relevant ledgers here. Okay, so if you know these ledgers and books of entry, you'll be able to open the accounts. Okay, then the trial balance is very easy because they're just going to carry the balances. So where you have to take note or be careful at is when you are opening the account. Okay, the sales ledger and the general ledger and purchases ledger. Even in the book of original entry, you have to also be very careful of the computation because that's what you're going to transfer to the word account, especially the sales journal, purchase journal, and the returns. So that's all for this question. We see you the next time and solve more questions under these topics. Until then, it's bye for now.